Hey, if you're someone who earns tips or works overtime, you are absolutely going to want to pay close attention. There's a major new law that could put a lot more money back into your pocket, and right now we're going to break down exactly what it means for you.
Let's just start with this number, $4,000. Seriously, for some households, that's how much they could save in taxes every single year because of these new changes. So, how on earth does this work? Let's get into it.
So what's the deal here? Well, at its core, this is all about lowering the tax bill on tipped income and on overtime pay. Two things that have always been taxed just like any other regular wage. If that's how you make your living, this is for you.
Okay, so let's start with the law itself. It's actually part of a much bigger package that's got this informal nickname, the One Big Beautiful Bill. And the idea behind it is pretty straightforward. Reward workers by letting them keep more of their hard-earned cash. Now, take a look at this timeline. The law was signed on the 4th of July. But here's the kicker, that January 1st date. These new deductions are retroactive. And what that means is they apply to the entire year, to all the tips and overtime you've earned since the very beginning of the year. First up, let's talk about the tip deduction. And look, for anybody in the service industry, this is, well, it's a potential game changer. This right here is the big number to burn into your brain, $25,000. The new law lets you deduct up to $25,000 in reported tip income from your federal taxable income. And that's not a one-time thing. We're talking every single year. Okay, so obviously there's some fine print, right? Let's break it down. Your tips have to be reported, and your job has to be on an official government list of tipping occupations. There are also some income limits. And, this is a big one, this deduction is for your federal income tax only. It doesn't apply to Social Security or Medicare taxes. So you're probably asking, how does the government decide who gets to qualify? Well, it all boils down to this official list called the Treasury Tipped Occupation Codes, or TTOCs. If your job's on that list, you're golden. And let me tell you, this list is probably way broader than you think. So you've got the ones you'd expect, right? The classic service jobs, waitstaff, bartenders, food servers, hosts. No surprises there. But it doesn't stop there, not even close. It also covers a huge chunk of the hospitality industry. We're talking bellhops, concierges, even hotel desk clerks and housekeepers. And then you've got the entire personal appearance and wellness industry. So if you're a barber, a hairdresser, a massage therapist, a nail tech, you're on the list. And get this, it even covers transportation and delivery services. That means rideshare drivers, valets, people delivering your packages, and even movers. So you see, the reach here is just massive. All right, so that's tips. Now let's pivot to the second major part of this law, a brand new deduction for overtime pay. And this one is specifically for all the non-exempt hourly folks out there.
So for overtime, what's the number you need to know? $12,500. That's the cap, the max you can deduct for that extra overtime premium pay you earn each year.
And again, we've got some rules to follow here. You have to be a non-exempt employee. That's the legal term for being entitled to overtime. But here's the really, really important part. This deduction doesn't apply to your whole overtime paycheck, just what's called the premium portion. And yeah, those same income limits we talked about for tips apply here too. So what in the world is the premium portion? Let's make this super clear with an example. Say your regular pay is $20 an hour. Your time and a half overtime rate is $30. You can't just deduct the whole $30. No way. The deduction is only for that premium part, that extra $10 you get for working that overtime hour. That's the magic number. Okay, so we know what the benefits are. Great. But what do you actually need to do to get ready for this? This next part is your game plan for both employees and employers. All right, if you're an employee, listen up. Here's your checklist. First, you've got to keep great records of all your reported tips and every overtime hour. Second, know those caps, $25,000 for tips, $12,500 for overtime. Next, when tax time rolls around, be on the lookout for new line items on your 1040. And seriously, especially this first time around, talking to a tax pro is probably a really smart move. And hey, this isn't just on the employees. Employers have a huge part to play in making this work. They've got to update their payroll systems to track these amounts separately. All this info has to be crystal clear on your W-2 form, so it's absolutely crucial they get all their ducks in a row. All right, let's pull this all together. What does this actually mean for your bank account at the end of the day? Let's talk about the real-world financial impact. Let's talk real money for a second.
A server who reports $20,000 in tips could see their federal tax bill shrink by like $2,000. That's huge. Or an hourly worker who earns $8,000 in overtime premiums, they could see savings around $1,000. This isn't just pocket change, it's real, tangible money back in your pocket. But this is about more than just the numbers. It's really about a shift in thinking. I saw one analysis put it this way. This law is a clear signal of a change in tax policy. It's designed to directly reward that really tough work people do on evenings, weekends, and holidays. The work that really keeps everything moving.
So that kind of leaves us with this big final question, doesn't it? This law puts a real financial reward on the table for service and hourly work. But will it go a step further? Will it actually shift how we as a society truly value these absolutely essential jobs? Something to think about.